Welcome back. You're still here with us on Markets Today. We spoke about the decline in IT stocks despite good numbers coming in from TCS and the buyback announcement from Infosys and the way the markets fell on account of weakness in the global headlines. But let's talk about all the other headlines that we're tracking for you today. And this one is from the cement pack. India Cements was one of the stocks which tanked about 11% after the company inked a deal with JSW Cement to acquire its subsidiary with limestone reserves. Spring May Mining. The stock fell due to its price valuation and lack of visibility for capex going further. Nigel D'Souza joins in with more details on this deal.
Well, JSW Cement has gone ahead and bought India Cement's subsidiary, that's Springway Mining Private Limited. The key asset in this particular subsidiary is a limestone mine that they have in Madhya Pradesh. The total quantum that they mentioned is around 477 crore rupees. Motilal Oswal in their note, they mentioned that they've had a conversation with the management and they expect another 127 crore rupees, which effectively was the money that was given by India Cements to this particular subsidiary, including interest. So the total deal value, they say, is around 604 crore rupees. The impact of this is they could effectively reduce that by close to 20% because the last reported debt number was around 3,100 crores. The promoter intent as well will be read possibly, and what the street will wait for is any kind of clarity whether or not they want to sell any of their other assets. Maybe the Rajasthan asset that they have, which is around 1.5 million tons. Well, it's a step in the right direction, but brokerages, they're not very enthused. Motilal says they reiterate their sell rating, though they've increased the target price to around 180 rupees. Valuations is one factor that they cite. It's trading at close to around 15 times EV upon EBITDA and also $82 on an EV per ton basis. They're saying there's no big capacity addition that they're talking about on the net debt to EBITDA basis as well. Things look elevated. Moving to Nuvoma, they say the move is certainly welcome, but more needs to be done on the deleveraging front. And if there are higher sales of non-core assets, then they'll be impressed. They maintain reduced with the target price at around 112 rupees from around 103 rupees earlier.
All right, Nigel, thanks a lot for that. With that, we move on to the fifth headline of the day. A bunch of stocks in focus. Divi's Labs, the top nifty loser after it fell over 5%. Export trends for the second quarter indicated that the company may see over a 20% revenue decline on a quarterly basis, according to IIFL Institutional Equities. Vivek Iyer joins in with the details on that itself. Vivek, fell and ended at the low point of trade.
That's right. So Divi's Labs today is one of the losers. A very interesting note has come in from IIFL Institutional Equities, where the analyst has actually gone ahead and tracked the second quarter FY23 export data trends. So in this particular data, that point that he's actually pointed out, they are saying that they may see a greater than 20% sequential revenue decline as far as Divi's Lab is concerned for Q2 FY23. So what they're saying is that this basically indicates that the company may see a dip in revenue, both in Molnupiravir, which was a one-time impact or a one-time boost that the company got in terms of revenue. That particular drug was used for the treatment of COVID. But more worryingly, it also indicates that there has been a dip as far as the base business, that is the core API business, is concerned, and which is why this particular stock, on the back of such a steep decline, is seeing a fall. Now, what is more interesting is that in some of the preview notes that we had a look at, most of the analysts have actually penciled in a 0 to 8%. In fact, BofA Securities is right in the middle, around 2% revenue decline is what they are looking at sequentially. So if you see a much larger than expected revenue decline, one of the reasons why Divi's Labs is falling today is this particular development.
All right, the other bunch of stocks that we are talking about, we had Automotive Axles ending in the green after Cummins Inc. Made an open offer to acquire 26% stake in the company. Though along with the market, the stock ended closer to the low point of trade, it outperformed by ending marginally higher. Sonia joins in with the details on that deal as well.
Thanks a lot for that. So this is an interesting one. Cummins, in any case, had to make a mandatory open offer for Automotive Axles because they hold about 35.5% stake. But Automotive Axles is now up almost about 4%. The open offer by Cummins is for the acquisition of around 40 lakh shares of Automotive Axles, representing 26% of the share capital. Now, BF Investments is the other promoter in the company. So Automotive Axles is currently co-promoted by the Kalyani Group's BF Investments as well as Meritor Inc. Now, once Cummins open offer goes through, it will be co-promoted or co-owned by BF Investments as well as the Cummins Group. Now, the stake that BF Investments holds is 35.5%, which means it's worth 1,137 crores at the current market price. The big question is, will the Kalyani Group tender into the open offer? They may not, because the open offer price at 1,500 is much lower than the current market price for Automotive Axles. But the company has done very well in the recent past. If you pull up the chart of automotive axles, it's more than doubled since Jan of 2021. It is a 41-year-old company. It manufactures axles, brakes, suspension systems for the trucks and buses segment in the commercial vehicle industry. And if you look at the past performance, the numbers have looked pretty good. So, in Q1, the revenues, for example, went up 96% year-on-year at 500 crores. The profits also went up quite a bit. Of course, the base was low. But if you map the last 6 quarters of automotive axles, it had 3 really subdued quarters. The revenues, the average revenues have gone up in the last 2 quarters. So business is definitely picking up. Hence, an interesting move over there.
An interesting mover there, but the other stock which was in focus was Sobha, down 4% after its second quarter business update. Vahista joins in with the details on that. Vahista, weakness in the second quarter?
Well, Sobha Limited has released its real estate operational update for Q2 of FY23, wherein the total sales value was up 13% year-on-year and the average price realization was up 14% year-on-year to approximately 8,700 rupees per square foot. However, on a quarter-on-quarter basis, that is sequential basis, there is not much growth, with total sales value which was marginally up 2% and the average price realization was up just about 3%. Now, on a half-yearly basis, though, the numbers look good, with the total sales value up 35% year-on-year, while the average price realization was up 12% year-on-year. Now, the new sales in terms of square foot was higher in cities like Bangalore and Coimbatore in Q2 of FY23, but was lower in Kerala, in Gurugram, in the GIFT City, Chennai, and in Pune. There was also 3 new residential projects which were launched in Q2 of FY23, 2 of which were in Bangalore and 1 was in Trivandrum. And this refers to a total saleable area of 8.8 lakh square feet. Back to you.
Take that point, Vahista, but stay with us. We have Panacea Biotech as well, which rallied about 18%. It received an order worth over 1,000 crore rupees. Take us through those details.
Well, the company has received a long-term supply awards which is worth approximately $127 million, which is nearly 1,000 crore rupees. This is a contract from UNICEF and Pan American Health Organization for the supply of its WHO pre-qualified fully liquid pentavalent vaccine, and the UNICEF award is worth approximately $100 million US dollars. This is for the supply of approximately 100 million doses during the calendar year 2023 all the way up to 2027. And Pan American Health Organization award is approximately 30 million US dollars for the supply of 25 million doses from 2023 to 2025.
All right, Vahista, thanks a lot for that. With that, it's a wrap on this edition of Markets Today. Thank you so much for watching. Stay tuned to CNBC-TV18.